All right, guys. So, the meltdown across US markets isn't over yet. And if you look at your trading screen yesterday, the whole thing was flashing red. This is what happens when Trump decides to go off the rails and the world loses faith in the United States. Everyone wants to get out and is hammering the markets down. The S&P has fallen by over 2% in its worst day since 2025. US markets lost $1.2 trillion in market cap. This is very ominous. History tells us that if January ends on the loss, the rest of the year will probably end up in the rate. The biggest losers were, of course, the overpriced tech stocks, but what's surprising is the crash in the banking sector as well. JP Morgan went down more than 3%. It's as if the market knows what is coming next. If the world breaks away from US assets, if trade continues to collapse, there isn't much need to deal with American banks, is there? So now the financial sector is at risk. This is the cascading effect of Trump's actions. Going after China was bad enough. Imposing a global trade war was unthinkable. But going after your allies is a really big deal. As a whole, the EU economies are in a weaker position when it comes to consumer markets, technology, and trade. The US is ahead, but Trump is heavily reliant on foreign capital, and Europe provides a lot of funding, a lot of money to the federal government. Europe holds a staggering amount of US debt. It's enough to convince Trump to think twice. They hold 40% of the entire foreign treasury market. That's double the amount of China and Japan put together. The actually heel of the US is their enormous reliance on deficit spending, especially during this period. The US needs Europe's money like never before. Trump wants to rebuild his supply chains. He wants to expand the US military. He wants to fight a cheap war with China and rebuild Venezuela, not forgetting to claim Greenland. Do you see how incredibly expensive all these adventures are? Let's not forget the unfunded liabilities and social entitlements plus interest on the debt. Trump needs Europe to keep putting money in. What's critical is the trend of Europe's bond buying. BRICS countries today are not buying treasury bonds. We all know China has been selling their own holdings every single month. It's at $682 billion today, the lowest since 2008. But Europe has been constant buyers of US debt. The UK alone increased their holdings by $148 billion last year. France also increased the stash by $41 billion. They are net buyers. Is European money that's truly keeping the US financial system afloat and countering China's own sell-off. That's why it's so mind-boggling why Trump wants to antagonize the EU. Is going after Greenland so important that you're willing to risk the entire US bond market imploding? And how do we know things are bad is because Scott Bessent is ordering Europe to back down. He just told them during the Davos Summit to sit in a corner and take the punishment. Do not retaliate on our Greenland terrorists or else. Again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic, and what I'm urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Now, this is just so bizarre, but it kind of makes sense. Remember what happened after Liberation Day? After those ridiculous reciprocal tariffs, the bond market revolted, and we had the Sell America moment. Everything started to crash, the dollar collapsed, US bonds crash, the stock market as well. US equities fell by over 10%. Bessent understands how this can play out, except it could be even worse. Just think about it. If US allies themselves start dumping US assets, it's a nasty signal to the world. Then all neutral countries will start selling. Not to mention the Chinese will increase the dump to ramp up pressure just for kicks. Now the Danish fund Academia Pension is the first to dump and start the ball rolling in Europe. The key reasons, as we said many times before, are rather straightforward. The US dollar is going to hit lower to fulfill Trump's ambitions. Meanwhile, Bessent is also going to ramp up borrowing. So there's no fiscal discipline. It pushes the US debt burden closer and closer towards default. But now there's an additional issue that has been revealed. Greenland's takeover is a reason for the Treasury dump, or the fund. Even fund. Managers know buying US Treasuries is as good as funding Washington's military adventures. This is not good for Bessent's Treasury market. Now sure, the Danish fund's dump probably isn't going to move the needle tomorrow. It's not enough money. They hold only $100 million of US debt in 2025. Not enough to cause a panic, but it is sufficient to get other funds and EU central banks to rethink the positions. Do we really want to hold dollar assets, especially Treasury bonds today? Now, despite this, Bessent is still playing with fire. He wants the EU to pay much more for defense, and for the US to take a step back. Even if this was a concern, why are you saying this? Now, the European countries and Canada were not meeting their, spending quote percentage GDP. Now they got a lot of catch up to do. Europeans have been spending the money on social welfare, on roads, on education, and it's time for them to pay more, which they've agreed to do. Here's why that little speech is going to backfire. EU economies today are broke, and we all know it. I'm just keeping it real. They need to spend a ton to keep their industries afloat, and they are still bankrolling Ukraine. How are they going to raise the money? Trillions of dollars for their defense. The EU can't raise more debt without crashing their economies as well. So, there's only one option left, and it's something that Bessent definitely would like. Europe will have to sell their treasury holdings to fund this rapid defense spend. Doesn't take a genius to figure this one out. The 10-year yield just hit 4.3% before retracing back to 4.29. We have jumped nearly 20 basis points within a matter of days, which is a massive move. Long-term bonds are getting dumped. The market is terrified of an EU treasury dump, and this pain is going to spread to major parts of the economy. Now, what happens when borrowing costs go up? Spending and expansion in economy drops. 70% of US GDP is driven by consumption, which depends on people swiping all those credit cards in the stores. And when the 10-year yield flies up, the economy itself starts to destabilize. People start spending less, and companies, they can't access capital to grow faster. The job situation in the United States is already in crisis mode. The US now has more job seekers than job available. There are only 0.9 jobs open for every job seeker. It shows how the tariff war is already hammering down job growth in the country. Now we had 7.8 million people unemployed in November. Job openings were only 7.1 million. And why is this the case? Because overall consumption is weak in the US. Companies, they have less incentive to expand. They create fewer jobs and tasks. The unemployment rate starts to go up, and that was from 9 months of Trump's tariffs. If the Treasury dump escalates, this chart will look a whole lot worse. If China dumping US debt wasn't bad enough, if the EU selling off treasuries wasn't bad enough, there's a bigger storm coming, and that storm revolves around Japan. Now, ever since the Prime Minister called for a snap election, Japanese bonds, they have been under pressure. Because of that, bond yields have gone ballistic in the country. We are seeing a big historic bond rout where investors, they have lost confidence in the economy and the currency. And Scott Bessent is in panic mode over this. He is pressing the Japanese to control their bond market collapse. Yields on Japan's 30-year and 40-year bonds. They flew up by over 25 basis points in just a matter of days. All this has to do with his fear of US treasuries getting dumped. Over the past few decades, US bonds were the gold standard for central bank reserves. Japan, for example, holds over $1.2 trillion worth of bonds. And what is the point of holding reserves? It is to deploy them during periods of extreme stress. Well, Japan is now facing a crisis that might need them to deploy the reserves, and that will mean selling their dollar holdings to rescue the yen. And despite the BOJ's rate hikes, the yen is still down by a crazy 34%, and the trend is still heading lower. There's no way to reverse this unless the trade war ends, and Trump removes the tariffs on Japanese exports. Now, Japan needs to drive more demand for the yen, and the only way to do it is to export more around the world. But as we know, that isn't going to happen. Now, I'm not saying that it will work. It didn't work for the last 4 interventions. Japan sold dollars to buy back their currency, and it gave them a reprieve of 6 months, maximum. The underlying economy of Japan is still extremely weak. Money is not flowing into yen assets, especially JGBs, for a reason. Even though yields are going up, the underlying currency of the bonds is decaying in value, and we are hair's breadth away from intervention. Here's how precarious the situation is. In under a month, the 30-year yield in Japan went from 3.4 to nearly 3.9%. Life insurance companies and funds, they're definitely selling some of their positions. Even Japan's finance minister had to film a video to calm the markets down. And when yields suddenly spike up, it destabilizes everything in the economy, including the stock market as well. Equity volatility in Japanese stocks is heading higher in a hurry. Big price swings are happening because rising yields are hurting growth prospects for all the companies. Just a reminder, Japan holds over $1 trillion worth of US bonds. If Europe dumps, if China continues to dump, Japan might be forced to sell their holdings too. And they have a legitimate reason to do so. They need dollar cash to support the collapsing yen. Bessent, of course, is taking this chance to also blame Japan for the collapse in US assets. Are going down because the Japanese bond market had a 6 standard deviation move for the past 2 days. That would be in their 10-year bonds. I've been in touch with my economic counterparts in Japan and urged them to take the necessary measures to stabilize their bond market, but that's spilling all over into all bond markets. German yields are up, French yields are up, US yields are up. It's mostly the Japanese bond market. Got nothing to do with Greenland. So, apparently Greenland had nothing to do with US bonds collapsing. I don't think so. Sounds like a bunch of malarkey to me. And what we are seeing is the US economy facing unintended consequences. Now you can call it retribution. You can call it the boomerang effect. Either way, things are not looking good for US markets. Markets that are heavily dependent on allies to play ball. If money stops flowing from Europe and the rest of the G7, where else can Bessent find demand for his bonds? On Mars? On Neptune? Where? And I want to end this with a wake-up call from Canada's Carney. Finally, someone has spoken out and said the obvious. The rules-based order has collapsed. The US has demonstrated they no longer care about rules, and it's time to stop invoking that tired old phrase. We are moving towards a new order of decoupling and new alliances. Economic blocs like BRICS will grow even stronger tomorrow. And with that comes a new investment landscape. And if you think US bonds or the dollar is still the gold standard, it's really time to wake up. We have 3 more years of Trump, and the pressure to dumb dollar assets will only grow stronger. And I have to make this crystal clear for the people at the back. We are not going back to the uniolar moment. That is over. So, position yourselves accordingly. But as always, let me know what you think. Will US allies continue dumping their Treasury bonds? And which G7 country is the next to break away? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.